I suppose pre-April, we were in a regime where actually there was still quite a lot of planning to do and a lot of opportunities, but I think business owners were fairly relaxed around if the worst case scenario happened, they were able to pass their businesses on and there shouldn't be the inheritance tax liability, and that was completely unlimited. That's been completely changed. So from a very simple point of view, you can still claim 100% relief, but there is now a cap, and that cap it is 2.5 million, and that's 2.5 million per individual. So if we have a common scenario where clients may actually have some wills in place, but they're quite basic in nature. So as an example, if you have a married couple with children, if sadly first spouse passes away, all of their assets pass to second spouse, and then on second death, it then goes directly to the children. And in theory, that may be exactly what they want to happen, but unfortunately, an individual is then massively at risk of losing that £2.5 million exemption. And the reason why isn't there maybe some pre-emption rights in there to say the existing shareholders can buy the shares from the estate, or the surviving spouse may just actually decide to sell the business. In both of those circumstances, what you then end up with is the surviving spouse then owns the cash rather than owning the shares. And of course, the cash doesn't then qualify for the £2.5 million allowance. It's then subject to 40% inheritance tax.
I suppose my headline for everybody in if you're thinking that that's something on the cards, and certainly do plan your retirement. You've worked very hard in building up your business. Why not plan for what age you'd like to retire? It's never too soon to have the conversation. It might be that you have a specific goal in mind that you want to sell or exit with a lump sum of X to fund your retirement, and your wealth planners might have helped you suggest what that number looks like. Well, maybe there's a conversation to be had about how do we build the business to grow to that point and then exit. But also there's a conversation to be said about how do we do that tax efficiently. IHT is definitely a part of it, but capital gains tax is also obviously an issue when you dispose of shares or business assets.